We do what? Do a little bit of planning. Just do some planning. That's what Bill Gates has done. And again, I don't mean to keep mentioning Bill Gates, but certainly he's somebody that we admire, respect, or certainly we know about. And the thing of it is you know what? Bill Gates is no different than you and I. I know he has a great deal of wealth, but with that wealth comes a great deal of burden. And he'll be the first one, in fact, he has said that in public. Now, here's what's interesting about Bill Gates. He recognizes that when it comes to his personal estate, there's only 3 potential beneficiaries of his stuff. And who would that be? Or who might that be? Or what might that be? The government, your heirs, or charity. Those are your 3 options. Now, if you freely choose to do nothing in regards to planning your estate, what's the likely outcome? The government. The government has a process in place for all of those who freely choose to do nothing, and it's called probate. And they will take control and they will take charge of your estate, and they will make sure that all of these eroding factors that we face on a daily basis get satisfied. And what happens in a probate process is very often there's very little or nothing left, but even more importantly, it does not bring families together. In fact, it has the opposite effect. So even if we were to just put money aside and look at the real value of family and relationships, it has an awful effect on that. So we know that Bill Gates is not going to choose that option, right? I mean, he's a visionary, he's a leader, he's a thinker, so he's going to do something. Now, here's an interesting statement by Bill Gates. He made the comment that I plan to leave little or nothing to my children because I know it won't do them any good. All right? Little pearl of wisdom there, right? Now, what do you think Bill Gates is saying? I'm a dad, you're a mom, you're a father, and we're all trying to do what? We're trying to figure out the best tools, the best tactics, the best strategies to not only protect and preserve our estate, but because it's more than just an estate. It's about our families, it's about our heirs, and we want to do the right things, we want to make the right decisions. But what Bill Gates was offering to us was a little bit of advice in regards to, you know, real wealth is not about what you receive, it's the journey that you encounter or that you engage in to that point where that wealth is turned over to the next generation. In fact, consider this. We are experiencing right now the largest generational transfer of wealth in the history of mankind. We're seeing that. It's happening right now. And again, there's only 3 options as to where that wealth is going to go. Is it any wonder why private family foundations are becoming more and more popular? Because we know that probate is not an effective transfer of wealth when it comes to family. We know that just giving assets and or monies to our heirs and dumping it in their lap is not an effective way to engage in stewardship, and I'll talk about that in a minute. Certainly that leaves us with the 3rd option, which is called charity. Now, it might be important for us this evening to discuss or at least define what is charity. What is charity in the eyes of government? What is charity in the eyes of society? What is charity in your eyes or in your heart? What does charity look like? What's it sound like? What's it feel like? Now, that's something that you're going to want to ponder and you're going to want to start to define for yourself because you have the right to do that. Now, let me just offer a government definition, okay? And this creates a huge opportunity. Charity is any activity that lessens or removes the burdens of government. All right, now if you want to go into the Internal Revenue Code, you can go to Internal Revenue Code section 501c3, and it will clearly define what the government sees as recognized charitable activities. And again, that's what? Educational, literary, religious, the arts. I mean, it's a very, very broad definition, and it's something that I would encourage you to look up or at least look in our materials, and you'll see what that definition is. But what it does is it proposes a huge opportunity if you do what? Just a little bit of planning, a little bit of pondering as to where you want this to go and who you want to have receive it. Now, what Bill and Melinda Gates have done is they've created an exit strategy from what we consider to be all of these eroding factors. And what they've done is this. In building this exit strategy, they have come over here and they've created a charitable enterprise called the Bill and Melinda Gates Family Foundation. All right? Now, what I'd like you to do is look at this symbol and you give it a name. I mean, we're not Bill and Melinda Gates, okay? But we are mothers, we are fathers, we're dads, we're husbands. We have the same challenges, the same concerns. But let's give this foundation a name that we choose, all right? And let's set it up in such a way that is compliant with all of the codes and all of the laws that are required. And let's create a charitable enterprise, or let's just call this our charitable estate. Now that's interesting. What's the difference between your estate or your stuff and a charitable estate? Now here's something I'm going to suggest, and you can think about this. When we're over here, all of this stuff represents what we in fact own, right? And in fact, most of this stuff, if not all of it, has our name attached to it, and that's what we call title. Now, what I'm suggesting or proposing this evening is that ownership is overrated. That there is in fact a higher form of ownership called stewardship. And all stewardshiping is about is acknowledging the fact that we came into this world with nothing and we're going to leave with nothing. But while we're here, we have what? We have certain responsibilities, we have certain opportunities, and if nothing else, if we practice stewardship, I like to use the acronym that stewardshiping is an art. Accountability, responsibility, and trust. Okay? Now, with a foundation, what this allows us to do is to honor and acknowledge stewardshiping and make that a real process in our lives and our families' lives. And let me show you how this works. Over here in the Bill and Melinda Gates personal estate, they had certain equities or ownership in Microsoft, right? And what they did is by taking these equities or stock and donating it to the foundation now became a stockholder. Okay? And it just so happened that this stock was valued at how much? $3 billion. When they moved this stock from here to here, they put it in a tax-free environment. And by putting it in a tax-free environment, they agreed to live by certain rules and disciplines, but certainly irrevocably devoted this stock as social capital. Okay? But more importantly, what did Bill and Melinda Gates do or retain when they transferred this stock from their personal estate to their charitable estate? What did they retain? Money that would have gone to the government, so they recovered what would be called lost opportunity cost. They certainly retained control. Now let me ask you this question. Is control a vital element in wealth building? Absolutely. Absolutely. What makes a retirement fund so frustrating? The lack of control, no control, because once you engage in that, in exchange, you get a tax benefit or deduction, and you're going to defer that tax benefit until a certain age, but you essentially lose control because now it's so encumbered with rules and restrictions and things that there's very little that you can do with it other than hope that it will grow. Okay? Now, you own that retirement fund, but who ultimately controls it? Those that create the rules, our legislatures. And I assure you, they have their eye on the retirement fund sector. And if they had their way, they would simply take it and combine it with Social Security, because they look at that as a retirement fund as well. All right? Now again, you can freely choose to do nothing and see what happens, or you can do a little bit of planning and make sure that you're in a position where you can freely say, you know, I don't think I want to participate in that. I think there's another way. I think there's another option. Okay? Now in our country today, we are so consumed with either or. Option A or option B. You're either this or you're that. You can either do this or you can do that, and that's it. When in reality, over here, there's a whole other option. There's a whole nother option for living. There's a whole nother quality of life over here, but very, very few people ever take the time to understand or appreciate what that looks like. And that's really what we're talking about tonight, you guys, is in a completely different option, a completely different way of living, a completely different way of thinking. But you know what? We're not pioneering this. This has been around for years and years and years. In fact, this entity that we're talking about tonight is considered the gold standard in the nonprofit sector because of control, flexibility, and tax minimization. Those three elements. Now, I don't know about you, but if my desire or objective in life is to build an estate or wealth and to protect it and preserve it, direct it and manage it, and then pass it on to the next generation, I better have some control and I better have some flexibility. And if I can minimize tax, I'm going to be that much further ahead than the next guy, right? But we've got to do it properly. Now, understand that when it comes to taxes, taxes are in fact social capital. But there's two types of social capital. There's involuntary social capital and there's voluntary social capital. What kind of social capital did Bill Gates engage in? Voluntary. If he had chose to do nothing, involuntary social capital or taxes would have kicked in and we would have seen $1 billion go in a direction that you may or may not want it to go. On the other hand, by having a little bit of planning in place and having this entity called the private foundation established and put in place, they were able to engage in what is called voluntary social capital. But it is both social capital, and therefore it's respected that way. Okay? Now consider this principle. To freely give is a virtue. To be compelled to give is a vice. Is that a true principle? Again, you ponder it, you think about it, and by understanding it and becoming aware of it, I want you to know this evening that you in fact have that choice. And I would dare say there isn't anybody in this room this evening that wouldn't prefer to what? To voluntarily or freely choose where that social capital is going to do the most good and be the most effective. The point I'm trying to make tonight is that you have that opportunity, okay? Simply by establishing what we call a private family foundation. Now, every time we move an asset from here to here, there are several things that occur that are to your benefit and certainly to the benefit of your family. Number one, anytime we move an asset from here to here, we create a tax-deductible expense on your personal income tax return. Okay? Now, there are certain limitations. There's a deductibility limitation on your personal income of 30% on an annual basis. All right? But by simply moving this asset from here to here, you reduced your tax liability by up to 30%. The other benefit that you have is once the asset is in the foundation and you liquidate or sell that asset, all 100% of that revenue or increase from that comes back into the foundation without a taxable event occurring. Okay? So there's another huge benefit. The other benefit is by moving it out of your estate, you never have to worry about that asset being subject to what kind of tax? Estate tax. Now, you may or may not remember just a couple of weeks ago, you may recognize the name Warren Buffett. Okay? Warren Buffett did something really unique. He donated, I think it was $40 or $34 billion to the Bill and Melinda Gates Family Foundation. Now, what an interesting thing to do. Now, we also know that Warren Buffett is what kind of an individual? He's a capitalist. But all of a sudden, he's become very, very interested in becoming a social capitalist. Okay? In other words, devoting monies and or assets for the social good. He created a foundation for his wife, I think it was $3 billion, and then each of his children, $1 billion. But he put $40 billion in the Bill and Melinda Gates Family Foundation. Now, what's going on there? Why would he do that?